Okay, let me see if I can get the right. Just let me know if you can see the slide show up there. So that's the beginning. Rob says we got it. So making your financial dreams come true. I don't think any of you are really trading crypto to lose money or, as a hobby. I think the number one goal that everybody's trying to do by trading, I mean, there is a thrill factor to it. A lot of people trade, and we've all seen the movies, Boiler Room and Money, all the different movies that are out there about, the adrenaline rush of following the markets. And Rob Paddock, I see him getting high every week, every day, every hour, every minute, watching the markets and, drawing his analysis on it all. So there's a couple of variables to it. And the main reason or my main goal tonight is to dispel some of the beliefs that you don't have to pay tax. I mean, we do have to pay tax in this country. It's a right of living in Canada. Our grandparents or our parents fought in the war for the right, to be protected by police. So I don't know anybody on here tonight that doesn't want police to show up to their house when you got three guys breaking in, raping your wife. Are you going to defend your family yourself, or do you want police to do it? What if your house is burning down? What if you break an arm or a leg or diagnosed with cancer and you got to go to the hospital or be treated? There is a reason for taxes, but it is true the wealthy pay much less tax than the middle class. And there's a reason for that. It's because they take the time and the effort to listen to webinars like this, to get educated on the different tax loopholes. And it's not tax evasion. It's using the Income Tax Act to your advantage and doing what you can to pay the least amount of tax by law. And that's our right. It's our constitutionally guaranteed right, although our rights are being infringed right now, left and right, by the government. But we'll get to that in a few minutes. So I guess you don't need to silence your phones because we are on Zoom. So this was our last presentation, I think, was about a year and a half ago, our live one. I think you were at one of the last ones, Robert, that we had downtown.
Yeah, I recall we were there at, you had a very beautiful office overlooking the water.
Yeah, we moved to New Westminster, so we're not we are kind of overlooking the quay in New West, but yeah, I missed that view. So I'll
I
just
was
give,
at the waterfront one.
yeah, and we still have access to that office, but we've migrated, most of our team works from home now, which cut our costs. Rent is the number one overhead, rent and labor is the number one overhead in most businesses. So we cut our lease costs by 85%, by moving and shaving down the office. So a little bit of history about us. We do have several companies, Mr. Investments, Mr. Bookkeeping, all under the same brand. But unlike Mr. Potato Head, we haven't given up our name yet. And I still have arms. So poor Mr. Potato Head got stripped of his gender, and to boot, he doesn't have any arms. So most of our brands do have the Mr. brand in front. The only reason being is because I got that nickname in high school. My grandparents were doing income tax, when I was 10, 11, 12. I remember them at the kitchen table every spring doing income taxes, and I kind of got the knack for it. It was something that kept me out of trouble. And my grandfather kept giving me piles of paper to add up. This is before calculators. And I just never thought of it as a business. So, I left high school, went into the trades, but quickly fell back into the business, so to speak, of accounting because I had a serious injury. I broke my neck, had spent 6 months in traction, took a year to recover, and couldn't work a physical job after that. I'd probably still be building houses. It's just something that I always thought was not really a business. And where it grew to between 2009, when we incorporated, to 2015, we partnered with a national payday loan company that has a series of payday loan stores and pawn shops. At the time, they had 30 locations. So we were in all their locations and actually partnered with them on those. And we were in 10 of the UPS stores in British Columbia. And we were growing exponentially. That happened in the first 3 or 4 years. And then by 2015, we had 42 offices, and we got bought out. Somebody came along and made a big offer. And the partner said, somebody wants to buy us out. And I said, sold. It grew too big, too fast. Careful what you wish for. It was, a great run. But between those 6 years, I almost had a nervous breakdown, went crazy trying to keep up with business. So careful what you wish for. But we, 4 years later, after the 3-year non-compete and a year of planning, we're back in the business. So we're back now franchising, became members of the Canadian Franchise Association. So get to swim with the big fish there. Most of them are national food chains or international food chains on the Franchise Association, over half their membership. But we do get a lot of mentorship there in building our business. And we're growing again exponentially by partnering. We have over 1,000 mortgage brokers already that have partnered with us to get documents for their clients, for their mortgage clients. A couple you see on the screen here. So over 1,000 mortgage brokers from all of these brokerages are using our services now. We have something big we're going to be announcing within about 2 weeks, a national chain with 17,000 mortgage brokers. So we'll be partnering with them and working with that group as well. So let's jump into the investments. This is something that I think, Rob wows you with his charts and his graphs, but this really dumbs it down. For those that are watching, tonight, you're all educated in the industry, but some may not know or some of the other investment vehicles or what all the different passengers are in those vehicles. So I'm just going to lay this out real quick. You can trade cryptocurrency inside your RSP. And I'm going to see if I can get let's see, how do we annotate? That's it. So we'll try and draw. There we go. So RSPs, column number 1, you get a tax break when you put the money in. But if you grow your account twice, 4 times, 10 times over your lifetime, you're going to pay 10 times the tax that you save put the money in. So do you want to trade your cryptocurrency inside an RSP account? What about TFSA? The maximum limit now is just over 70,000. You may have grown it more than that. We're going to show you a client that we're working on right now. We've changed the name and information. We're going to show you the actual tax returns and the amount of tax that he owes. And I told him when he came to us, he should have come to us when he made the first 100,000. He made over $3 million last year in his trading account. And he's now being taxed about 1.2 million on that. So, be careful where you're trading your money. What vehicles is it in? They call those first 2 columns registered accounts because the government knows everything that's going on with them. And Robert P. was talking earlier about, the government or Canada Revenue, Canadian government trying to get into the back end of all the different platforms to find out, who owns the accounts, et cetera. Because they know there are people that are making money hand over fist and they just want their piece of it. And we're going to show you, first of all, what your rights are if Canada Revenue comes knocking and how to minimize the amount of tax that you have to pay, not just how to track it, but how to minimize it. A small known tax shelter is ITS, Insurance Tax Shelter. So corporate owned life insurance is the number 1 way in Canada. It's what all of the wealthy are doing. It's what the big corporations are doing to shelter the amount of growth that they're taxed on. So lifetime growth inside and there are maximum contribution amounts. So it acts just like a tax-free savings account, but it has the added component of life insurance. So if something happens to you, then you guys will recognize this one right over here, cryptocurrency. Other, you can start a business. You can start a business selling gold. You can start a business selling gold and crypto. You could have crypto-backed gold and et cetera. It's infinite, the number of variations that you could have in the other category. But a lot of people start a business and they pour their life savings into their business. And then at the end of the road, they sell their business and they have enough money to be able to retire. And I believe that's probably the goal for most people watching here is how do you get to the point where you could just trade crypto full time because that's what you like doing. You wouldn't be on here if you didn't like doing it. So how do you get to that point? But these are the different, what I call vehicles on the left side. And if we look down the left side, the passengers, mutual funds, you have stock, you have crypto, you have 85,000 eligible registered investments in Canada that are registered with the government. And right now, most of the cryptocurrencies are not, but that's about to change real quick. So let's just use this star fund down at the bottom as an example. And if we go down here, let's call that Bitcoin. So let's say on average, Bitcoin, what did Bitcoin produce? If somebody bought $100 worth January 1st, Rob, and they sold it during December 31st. Let's say it made 5%. We'll just use that. It's probably a lot more than that because of what happened this year. But it doesn't matter how much that made, because if you had it in your RSP, you wouldn't have been taxed on it. You tax in retirement on all the growth. Same thing inside your TFSA. If it was outside of a registered account, you'd be taxed one of three different ways, either capital gains, dividends, here we are, or interest. You can park your cryptocurrency now, apparently, and just earn interest on it, cutting out the middleman, cutting out the banks. Why do you think the banks want in so bad? Why do you think Canada Revenue wants in so bad? And I'm not the expert on cryptocurrency. We just account for it at the end of the year. So if it makes 5% here, it doesn't matter what vehicle you have it in, it's still made the same amount. If you bought and traded on the same day and you had 100 units of Bitcoin or Ethereum or DOT, I chose DOT, DOT. I didn't even know what that was. It was just the last one at the bottom of the list because that was on Ed's checklist.
Polka dot.
Yeah, polka dot. So I just picked it because it was in last place. I always pull for the underdog. I think I was the only one that picked it. But do you see how it's taxed differently? Depending, it's the exact same investment, getting 5%. It just depends where you park it, how it's taxed. So our job as accountants is not to make you more money on your trades, not to show you the down line or the up line or when to get in, when to get out. We just take the mess at the end of the year and try and minimize the amount of tax that you have to pay. And that's pretty much our only goal. Don't ask me for crypto advice.
So, Robert, if I might chime in here, we had a question on that actually topic, asking about if over-collateralized loans are a tax strategy, where does it trigger a taxable event if they haven't sold the coin, but they lent it to someone or lent it to an exchange to earn 6% interest?
That is a great question. We're going to cover that kind of, I think. I think we'll answer that question when I pull up the CRA page. But cryptocurrency has so many, every time I bring up this subject, it has so many variables. So it's, first of all, it can be used as a currency. So apparently you can buy a Tesla now with Bitcoin. I don't know what else you can buy. It was funny. Somebody made a post about a year and a half ago about some massive crypto. This was back before COVID. Some massive cryptocurrency event down in San Francisco with like 3,000 people showing up. And they couldn't accept cryptocurrency to pay for the fee to go to the event.
I think that was consensus conference.
Something like that. It was just a funny post. It was ironic, but it's just going to take a bit of time for everything to catch up, where I believe you'll be able to have, a sensor in your thumb, and that's how they're going to track everything. And the cryptocurrency and the blockchain is just the beginning or the tip of the iceberg. So I do believe there is something there. It's just not for me because all I know is taxes. That's it. So I have that dollar coin up on the screen. And if you can see my image there, I think I'm somewhere on the Zoom. I'm going to hold up a coin here. So that coin is a loonie from 1984. And I'm going to make a couple analogies to this coin. So how much is this coin worth? It's a mint loonie still in the case. If I took this out of the case and I went over to the dollar store, I could buy a chocolate bar with that loonie. If I took it to the bank and deposited it, they give me a $1 credit on my account. But if I put this on eBay, I could get 34 bucks for it. Now, what if this was given to my grandmother by the Queen and she had a photo to go beside it? It'd be worth more than 34 bucks. What if I took it and cut it in four? If it was, what if I made an NFT out of it? What if I melted I just had another thought, that photo that was burned, somebody said, well, it was just a print that was burned. But what if I took this coin, melted it down and made mini coins out of it, 100 mini coins, and sell them for $100 each? or I threw it in the lake like Muhammad Ali did with his gold medal. So there's so many variables and so many directions that cryptocurrency can take. I don't think anybody's even touched the tip of the iceberg. And just like Rob said, somebody, the Asian company, Chinese company was buying Bitcoin like crazy. What if Jeff Bezos decided to buy all the Bitcoin? Nobody could trade it then. He'd hold it all. Then there'd be no value until he released it. Then it would double in value. So many variables. And how do we track all that for tax purposes? There's the whole purpose of that last 5-minute rant was just to confuse you and get you geared up for the tax side. So you can see here by 2017, it was up 19,000% or up to $19,000. And then, recently up to 60,000, now back down to about 50 some thousand. So it depends on when you buy and when you sell. If you are trading, what if you started out with 10,000 and you made 60 and you went out and bought a Tesla? How would you be taxed on that? Well, make a deal with Mr. Elon Musk and keep it quiet and nobody pays tax on it. But the government will get their hands in the pie somewhere. So the third facet here is a main facet, because the other ones, we got diverse there with all the different variables with cryptocurrency. But the last one is the blockchain, and how do you account for it? So, we were talking last week and we had a lot of people reach out to us. How am I going to be taxed? Well, one woman had bought about $2,000 worth of cryptocurrency, different coins, but she hadn't sold any yet. So I said, you don't have to worry about taxes yet until you sell it. So the number one thing you're going to have to do if you are trading, most of you are on a platform. I know Rob has his preferred platforms. And if you're working with Rob and his coaching program, you'll get involved with that. Very easy to track because it's all electronic. It's digital. It's very easy. You push a button and you get your report. Okay, I made 10,000 this year, or I lost 5,000. And then how do we track that on the income tax return? We're going to pull up an actual sample of income tax return. So you don't have to copy this link that's on the screen, but this was the actual CRA link. And I'm going to see here if I can pull up. I'm going to pull up the actual link on CRA and see if we can get that here. And we'll just follow through it, and we'll go back and share again because I don't think you can swap the screens. So Rob will give me the thumbs up if you can see the CRA screen. That's awesome. So I don't think you can grab the link out of the screen share here, but just Google cryptocurrency on the CRA website. And I'm going to go down here and talk about a few things. Number one, you always have to sleep with one eye open if Canada Revenue is in the room. Because when we go down here, it is business income. Is it business income or a capital gain? That is the main question, how it's going to be taxed. Number one is track it. That's grade 3 mathematics. A simple spreadsheet. You find out how much you bought, how much you sold, what the difference is. It's mathematics, grade 3 math. It might be 4 columns, 5 columns, or if you're like Rob, trading 6 columns at a time. But you have to track it. Now, once it's tracked, I made a comment on the closing last week when I was introduced last week, and somebody made a comment. I didn't have time to respond, but they said, no, it's taxed as a capital gain. Well, I don't see any instructions on this page how to claim trading cryptocurrency as a capital gain. CRA talks about, well, is it business income or a capital gain? But if you read through this, which I've done many times now, there are no instructions how to do it as a capital gain. They talk about how to nail you guys to the wall if you are trading. And once they get their foot in the back door, every one of you is going to be pinned to the wall. So what determines whether or not it's business or a capital gain? It talks about a few things here. If you carry on activity for commercial reasons and in a commercially viable way, well, most of you have an account, a trading account, that could be deemed a business. You promote or product or a service. Well, if you're promoting cryptocurrency, and I know there's some groups out there that have their coaching programs like Rob does, Is Rob's now treated as a business, or is it a separate entity? These are all the things that we fight for. I'm not going to say every accountant out there, very few will go out and fight for your right as a taxpayer. And we're going to show you how to do that on your own and what to do if Canada Revenue comes knocking. So if you show, I'm going to highlight this one because this is the pièce de la résistance. You show that you intend to make a profit, even if you are unlikely to do so in the short term. So tell me, not all of you are out there trying to make losses on every trade. So according to this definition on the Canada Revenue website, you are all in a business and you're going to pay tax on all the money you make at 100%. So how do we get around that? Do you park your money and leave it in a RSP so that they can double tax you on it? Do you put it inside a TFSA and let it sit and hope it keeps going up? No. There are ways around it. There's case law out there, and every situation is different. It depends on if you have a full-time job as well and you're just doing this part-time. Is it part-time? Is it full-time? Again, CRA, if you're assessed or CRA comes knocking, don't talk to them on the phone. Don't say, oh, I was just taking Rob Paddock's trading course and he told me it's a capital gain, so therefore it's a capital gain.
Luckily, we teach them, Robert, that every single trade I take, I have a risk and reward. So we expect a loss on every single trade. If they really want to screw with you, with my course, you're going to have a potential loss calculated on every single trade. Therefore, you can prove that you're not trying to make a profit. They're sneaky for putting that sentence in. Basically, if you want to make money, we'll be able to tax you. But I know from a fact for a tax-free savings account, thanks to Rob, that if you overtrade, then it's easier for them to treat you as a business. For me, I'm a lost cause because I basically teach how to trade. They can easily come after me and say, oh, you're carrying on, you have some skill, you know what you're doing, then it's a business for you, because they actually think I have no risk when I actually do have risk. And if you basically, the cutoff, it's a gray area, just like Robert is pointing out. They do that on purpose so that they can basically go after anyone they want. And in the tax-free savings account, I tell so many people, don't overtrade in a tax-free savings account, because there have been people that made $10 million when the maximum what's the maximum contribution up till today? Like 60,000 if you never
76, I think.
76. So if someone put in maximum 76,000 and now they have 10 million tax free, Canada's like, wait a second, that wasn't supposed to work like that. We don't want to make you 10,000% returns and then not have to pay any tax. We didn't think that was possible. And yet here are some traders I know that did that, and they go after them and say, sorry, you were carrying on a business because you must have known something that some other people didn't. Therefore, you're a business. You do this, to get that knowledge, you must be in the field. So definitely what I tell people is place one trade to bypass that and don't touch it. For the long-term trades, I park in the tax-free savings account. If I was not me, of course, because with me teaching it, I can't really get away with saying I don't have a business income trading. But for some of you guys, you could say, you know what, I just traded one thing, kept it in there, didn't trade. Once in a while, okay. Once, I don't even want to say once a month because it's such a gray area, but say once every 6 months if you buy, or once a year, then it's not so easy for them to call you a business income. But I do side with Robert and say be cautious and just treat it like a business income more likely than not. And when you're actually going in and out and profiting on both directions, then you're going to expect that to be a business income.
It's a matter of making a plan and documenting it. It's just a letter that maybe we could put one letter together, Rob, for you. So you can share with the team and those that are in your course.
Robert is so great because he actually tells me now that I am a business. Okay, we've established that. Robert is one of the best people I know, if not the best, to help me find out what can I write off against that business income, because now businesses have expenses to show that I made profit. Yes, but I also had to, have a cell phone, a car to make that profit.
So Canada Revenue is a little bit hypocritical because they put 3 examples in here and each one of them circles back to business. There's nothing showing you how to make, they only show you how to pay more tax. And that whole page, it's probably, I'm scrolling here, my finger's getting sore scrolling. Out of that whole page, that's the only sentence that matters. If you intend to, why else would you invest? And if you're talking about risky investment, I've never wore a mask while I've been trading. I don't trade, but I play a trader on webinars every now and then.
So I'm going to change my stance now. From now on, I'm not going to teach people how to make money. I'm going to teach people how to lose less money. That's
There
going to
you
be my
go.
course.
I like that. That would stand up in federal tax court. I believe it would. So, okay, I'll try and stop sharing the screen and we'll get back to the PowerPoint here. Let's see if we can get that one back on. Is that back up on the screen, Rob?
No, we're seeing you
Oh, that's no good.
in their
Can't
wonderful office there.
We can't have that now.
But watch, if too many people start saying how to not lose as much money trading crypto, then they're going to change the rule again and say, if you're expecting to lose money or expecting to make money, you're going to be treated as a business.
Yeah, I'm going to get this slideshow back up here. Let's see if we can do that. Technology, there we go. We'll try and get back to where we were at. So the next thing I'm going to pull up, Rob, is this was a paper, a white paper put out by the CPA Association a couple of years ago on, and again, I believe it's about 30 pages. Ed is going to share a link at the end of the webinar where you can get a full copy of this. And what I'm going to do is try and pull this up on, try and get it up on the screen where everybody can see the full copy of it. And Ed's going to have a link where you can get a full copy of this.
Yeah. Oh, shit.
There it is. You should be able to see the PowerPoint up on the, or sorry, the PDF up on the screen of that document. Yeah, I get the thumbs up from Rob there. So this document, 33 pages by the CPA, the exact same thing I'm going to say about the CPA Association as CRA. They're throwing you under the bus with this document. You can read it. You can have a copy. Talk to Ed. He'll get you the link at the end of the webinar. But I'm going to pull up a couple, see if I can blow these up here. And they just regurgitating what they get off the CRA website. As soon as the CRA blinks, the CPA follows. The CRA says jump, CPA says how high. CRA says open the door. The cryptocurrency and blockchain platforms open the door for CRA. Our goal as citizens is, to be able to make it through life, earn an income, be taxed as little as possible. The average Canadian pays 50% of their lifetime earnings to some sort of tax. Our goal is to keep as much of that in your pocket as possible. So here's a little graph that they have in here. The entity has cryptocurrency wallet that has been accounted for. C, well, what does that mean? We got to scroll down to C to see what it means. The entity misrepresents ownership of a private key and therefore of a related cryptocurrency. That reminds me of my days at the food bank. When I worked as the accountant at the Vancouver Food Bank, I was there for 6 years in the late 90s, early 2000s. I did a stint in the public practice there. A credit card company came to us and said, we can sell you these credit card machines and you can go out and collect donations. And if you want to pay an extra 1.5% on every credit card transaction, just in case people are using stolen credit cards, it will protect you. Well, why would we pay that extra 1.5%? Who's going to use a stolen credit card to make a donation to the food bank? It just doesn't make sense. It's like somebody stealing somebody else's, their passcode, cryptos. Yeah. The private key. Yeah. Sorry. Private key, guys. Somebody stealing a private key, trading on their account, stealing their money, and then going to the government and say, I want to pay tax on it. Who's going to do that? So when you really read into this document, and you can have it, it just talks about really summing up what's on that Canada revenue page. So Ed will share this with you, a full copy of it. It is put out by the CPA Association, the largest group of accountants in Canada. Second largest is H&R Block. There's 200,000 registered representatives with e-file licenses in Canada. So the CPA is not the end all be all, but they talk about, this is a good read for everybody that's on the webinar tonight. You'll have some insights. And when you have questions on any of this stuff, just reach back. we'll have our contact info somewhere at the end. See, I have to stop share and then share again to get the presentation back on. Let's see here. So that is the CPA document. Again, I showed you those charts inside. Number 8, there are significant delays in processing cryptocurrency transactions at the end of a period. I think it's pretty much instant, isn't it, guys? So at the end of a period, what is that? At the end of the tax year, are you going to be trading this inside your corporation where you have a midnight deadline to trade? Rob was talking about that, selling at the end of the year. So if you're trading personally in not outside of a corporation, the account's under your name, December 31st midnight is your year end for taxes, everybody in Canada. So you can time losses at the end of the year. If you want to dump a bunch of stuff at the end of the year, time losses, you can carry back non-capital losses 3 years. So you don't have to worry about meeting a deadline at midnight, December 31st. I don't think most people on here have not been trading for more than 3 years, maybe a handful. And then taxes are used as a currency. You'll be taxed as per using cash or credit or payable, etc. So what they're talking about is if you use your cryptocurrency to buy merchandise or services, because it is available, you can go out and purchase a Tesla. You can purchase services with crypto. You can swap it, trade it, do all those things. You will track your buying and selling in a traditional accounting system. So what that means at the end of the year, you're just going to have to somehow get it into your tax return. You can type it in manually, go to an accountant like us, use software online, but you got to get those numbers from somewhere. And what Rob talked about, because most of you will end up filing your returns, we're going to show you an example of a tax return here where the software assumes that it is a capital gain on this fellow's trading account. He has a personal trading account, I believe, with Scotiabank, but you can claim your use of home space. You can claim your telephone because you're using it to call Rob for advice, or call your accountant for advice, or call CRA to find out how much tax you owe. You can claim your internet. What about your computer? How did your computer get to your house? How did the ink for the paper get to your house? You had to go to the Costco to buy it. So travel. You go to a conference on cryptocurrency. You go to your accountant's office. You go to networking events. All of these things are tax deductible. You just have to track it all. We talked about these. I'll skip through this. Here's a big one, the Taxpayers Bill of Rights. So the Taxpayers Bill of Rights is not legislation, but it's a document that CRA put out. And what it does inherently gives you rights because they put out the document and it's been tested in the Supreme Court of Canada. They now have to honor what they say in the document. And I'm just going to pull out one of, and we'll get a copy of that, Ed, if you remind me to send you a copy. It's downloadable online anywhere you can find it. But number 7 on the Taxpayers Bill of Rights, and they have a small business Bill of Rights as well on the same page. But number 7 says you have the right, unless otherwise provided by law, not to pay income tax amounts in dispute before you've had an arbitrary opportunity to object it. Now, how do you enforce that? It's called a notice of objection. It's a 1-page form. So if Canada Revenue comes back to anybody on the call here tonight 2 years from now and say, well, you claimed your cryptocurrency as a capital gain, but we're going to assess it as a business. So now you got a $5, $10, $50, $100,000 tax bill. What do? You file the notice of objection. That's it. And then you talk to somebody who can help get you out of the pinch. Either a tax attorney. We're able to represent individuals in federal tax court. We've done it many times, and just had another case now going to federal tax court arbitrarily saying that a Vancouver Canuck owes $180,000 for a business that he sold a couple of years ago. It was never his business. It was in his ex-spouse's name, and they're trying to pin the tax on him because he has money. So CRA will do that. They will give you an assessment. And I always make this analogy. If you get a notice of assessment in the mail, and it's the president of a Nigerian country or African country, and they're telling you that you have to pay $4 million in fees, but you'll get $25 million in tax relief. Don't believe the assessment. It's like those scam emails. If they say you owe money, take it with a grain of salt and file an objection right away. Because what can happen is that will show up on your notice of assessment or your CRA account. And then what will happen is if you have a mortgage, that will go on your credit bureau. And I've seen mortgages not getting renewed because somebody has a tax balance owing that they didn't know about. They never got the letter, never opened it, never addressed it, hid their head in the sand. So here's the steps to exercising your rights is you file the objection. The next step, if they refuse that, 9 times out of 10 they do. So make sure and fight it all the way. File an appeal, the exact same form to the exact same department at CRA. Last step is federal tax court. Fourth one is Supreme Court of Canada. And last resort, just go to Mexico. That's the easy one. But know your rights. If you get an assessment, object it. That's what it's called, a notice of objection. Fill out the form. You can do it on your own. It's as simple as saying, I got this assessment on March 24th. I don't believe I owe the tax. I want somebody to review it. A couple of weeks later, you'll have somebody call you and you can say, you know what? I believe this was just a trading account. I only had 10 trades. They might say, yes, you know what? We believe you. Or no, you know what? Sorry, you still owe the money. Then you file the appeal. But by then, it doesn't go on your account on CRA. It's in dispute. So it buys you time to go out and seek the advice. Talk to Rob, reach out, talk to us. We'd love to have your business. But we're here to give advice tonight, not recruit clients. Okay. So if you liked anything that you saw, and I don't see the chat area up here. The last thing I'm going to do before this, Ed, before we go to questions, is I'm going to pull up a tax return on the screen. And I'm trying not to hit the red button here by accident. I did that one webinar and I shut off the whole, it was our webinar and I shut off the whole webinar. So this is an actual tax return. The only two things that I changed on this, was the information. It's not Tommy Gunn and it's not 123 Main Street. And his date of birth is 66, but I just put March 30th on there. Let's take a look at the slip. So this fella had a Scotia Capital trading account and he traded $25 million this year. It's an actual account. He started out at the beginning of 2020 with $18,000 in his trading account. It is insane. I didn't believe the guy. I honestly did not believe him. He walked into our office. He said, I got a big tax problem. You can look at this, but he made $3.5 million, $3,349,000. And where did the software put this? Because it was on a T5008 slip, because he was trading with a bank. It was a Scotia Capital account. They track it. They send it to the government. He didn't even start with this in his TFSA. If he did this in his TFSA, he wouldn't owe a nickel right now. I told him when he made his first $100,000, he should have talked to us. We could have set him up with a corporation, put his trading account inside the corp, funneled it all through a corporate-owned life insurance policy and taken the money out tax-free, more than enough to live on, tax-free. So where does that show up on the main return here? It shows up as a capital gain. So this guy was trading, I'll tell you what he was trading, mostly tech stocks, and he had probably half of his trades. He had, I think, 78 trades. That was it. It was, most of his trades were in Tesla. And one trade he made, the biggest one, I had to scroll through. I actually exported everything to a spreadsheet. His biggest trade, he made 210 grand. It was about 2 months ago. Sorry, it was 2 months into, so it would have been end of October, November 2020. It was 210 grand he made on one trade. But it kept ballooning. And I said, and trust me, this guy doesn't have any formal education. For years, he wasn't making any money. For many years, he was taking care of his mother, his ill mother. And then he had a little bit of an inheritance from one of his aunts or something and put the money into a trading account. Should have put it in a TFSA. He's on the hook. Can you see the bottom of the screen? $1.169 million. It's insane. There, he had a little bit of commission from this little side gig he was doing, and that was it. We haven't put any expenses in here yet, but you need an awful lot of expenses to get rid of $1 million tax bill. So if any of you are on the cusp of making it big trading, talk to a professional. I mean, we're here. Of course, we're looking for, everybody's looking for more business. We're not looking to make money on trades. Our doors open for clients for advice, but we're here tonight to answer questions. And I guess I'll finish this off and then we'll jump into questions, Rob, and try and, get everybody home at a reasonable hour.
No, we appreciate the value you provide. Sometimes an ounce of prevention is worth a pound of cure. And that's absolutely true with the taxes. If you position it correctly in advance, you're going to give Robert less headache and work down the road to try to help you dig your way out of a hole. So definitely this is very powerful. I guess what it comes down to at the end of the day is CRA wants to get their hands in your wallet. And the easiest way for them to do that is to say that you knew what you were doing, therefore we're going to treat you as a business, and therefore it's up to you now to try to find your expenses to write off against that income. But at the end of the day, moral of the story, pretend like you don't know anything. It is okay maybe to sign up to an education program to show that you don't know anything, but at a certain level, money speaks louder than words. And if you make $10 million, CRA is going to say, ha, you did know what you were doing, therefore you're a business. So they leave the wording in the context of the law so that it's difficult for Robert to give you a clear-cut answer on anything, because they make it a gray area on purpose so that there's always a way for them to come after you and still say, you know what, even the $3 million, they're going to want to go after one person to collect tax on $3 million, or do you think they're going to want to go after 10,000 people to collect $100?
They go after groups. And the number one piece of advice I'm going to give everybody is, if CRA comes knocking or calls, just tell them you need to speak to your advisor. Don't give them any information. If you have an advisor on your account, make sure they know what they're talking to CRA about. There, I see some questions coming in, Rob, so I'll try and scroll back through these. If we miss some, make sure and pop it in again, copy, paste. Martin asks, I would like to know what the difference is in terms of the tax rates between personal and corporate, federal and provincial taxes. Well, those charts are pretty available online. The big difference is, you saw that example I showed on the screen, it's almost 50% in tax. And that's at a capital gain because he has the surcharge on that. If he gets nailed and he gets pushed, that income gets pushed into business, it's at 54%. That's in BC. If you're over 400,000 in BC, you're at 54% tax. Alberta's the metric province. Their provincial tax rate is only 10%, but they still have the same federal tax rate, the same across Canada. So it's very easy to find out. The thing, Martin, you want to do is try and estimate where you're going to be going. If it makes sense to incorporate, that's some of the questions we answer on a daily basis, is find out, we're into a new year now. You can incorporate before the end of the calendar year to flow money in through a corporation, but you have to decide how much you're going to make and determine that amount, and then we can give advice on it.
Do you know how much the small business tax rate is, the exemption, like up to $500,000?
200,000. And then
200.
every $1,000 above that, they reduce it $5,000.
Because I thought you could make $500,000 in a business and get only like 20% or something.
Well, I was just on the phone with a client today that set up his corporation in Bahamas. So his MLM company is in the US. So all of his income, he's doing $1 million plus now. All of his money is going from his US corporation directly to the Bahamas account, a complete wash. He makes $100,000 a month in the US corp. $100,000 US goes to the Bahama corp.
As a loan?
No, as a transfer, as a consulting fee. And then he's taxed 1% in the Bahamas. And he transfers all that money back into his Canadian corporation as a dividend, zero tax, and flows the money through his corporate-owned life insurance policy.
I've heard about that.
So once you get up into the, the $100, $200, $300,000 range on a consistent basis, then you can start looking at strategies. It cost him about 10 grand to set it up. He had to go to the Bahamas, so I'm not going to count that his expense because he lives a lavish lifestyle. He probably spent 20,000 on the trip, but about 10,000 in legal fees and consulting fees in the Bahamas to do it. Where I first saw that was when I actually went to register the name Mr. Taxes back in '84. I was researching the trademark listings for H&R Block, the big competitor out there, and their trademarks are owned by HRB Royalties Inc., head office, Nassau, Bahamas. So where do you think H&R Block, that does 2.1 billion in revenue a year in the US, flows all of their income? Through the Bahamas. So they can spread it out to their shareholders at a preferred tax rate. It's more money left over for the shareholders. If you're in that income bracket, there's more money left over for you. And you don't have to be making 100,000, 500,000 to work with us. We have clients that are on social assistance, welfare, they call it. If we're going to be politically correct on the show tonight, call it what it is. But clients that are on social assistance, we help them out. 9 times out of 10, we don't even charge them. The reason being, they don't get medical services. You can go into the hospital and get treated for a broken arm, but you see people running around downtown with a cast that's half worn off. They can't go back for the secondary treatment. Once they go in and let the cat out of the bag that they haven't filed their taxes and they don't have MSP in BC, they can't get secondary treatment or follow-up treatment. So, it doesn't matter what income level you're at, what questions you have, we can get them answered. We have an insurance brokerage. We work with all the top tax planning departments at all the major insurance companies. Our biggest client, 150 some million in real estate. Our poorest client, Rob Paddock. That's what we're telling CRA.
Yes, I'm so proud of that. So definitely, I love being homeless because they can't take my house. But I like to rent penthouses. That's for sure the way to do it. But at the same time, I do love that idea. Spend 5,000, get an IBC, International Business Corporation, and that corporation is the owner of the company here. And then that's why you have like Costco Canada Inc. They make all the money and they send the money to Costco in the Caribbean. It's a totally separate company, but it's also starting with the words Costco. And I don't know if it's a loan, but that's why
I got some questions coming in.
Yeah.
If any standard for write-offs for income accrued. So QG asked the question, what if any are the standards for expenses? So we have a simple spreadsheet. So make a note, Ed, we'll get that spreadsheet out. It's on our website, mrtaxes.ca, on the forms page down at the bottom. There's a simple spreadsheet. All of the line numbers on that spreadsheet correlate to the line numbers on the T2125, the self-employed business return. But again, remember, you don't want to be treating your cryptocurrency as a business. You want to be doing some other side hustle where you can claim all these expenses. So again, a little, CRA will catch you on that. Dave asks, if we were on CERB for a few weeks, I hope it was more than a few weeks, Dave, because the government is never going to give money away like this again. So up to 14,000. If you didn't get it all, go back and claim the rest. If you were trading and you didn't cash out, you could technically still collect the CERB and not be offside. Here's something with the CERB. They told people in January of this year that many of them, didn't have 5,000 of income for the previous year. You had to have had 5,000 of income to collect it. But they nailed everybody in February. They put out this press release. Well, taxes weren't even filed yet. So what we did, we put a bulletin or we put a couple email blasts out and some posts on social media. Hey, if you've been nailed by CERB to pay it back, give us a call. All you have to do is claim 5,000 of income for 2019 and you're off the hook. Where did the income come from? Rob Paddock paid me 5,000 to stay quiet. So there's so many loopholes. I think they made these rules up too fast so that, they missed a lot. They didn't button all the holes up. They didn't sew up all the tears in the legislation, the rules. They started changing the rules as we started to apply for the CEBA, the 60,000 for the corporations. We retroactively filed payroll for a lot of people, switched it from dividends over to payroll so that they could get the loan for the corporate loan for the Canada Emergency Business Account. And then CRA went and changed the rules again. They said, no, you're not allowed to set up retroactive payroll accounts. Well, what if somebody had payroll and they just filed late? Would you come after them then for payroll withholding taxes if they filed late? Yes, you would. So therefore, we filed a couple complaints and then they changed the rules again. Then they started allowing dividends. So now we had to take everybody that we switched from dividends to payroll and payroll back to dividends so we could reduce their tax. So we've helped about 150 companies with the CEBA loan. So if you have a corporation out there and you're watching tonight, apply for that. If you need help, our website, I'll type it in the chat area here, a webpage. If you know anybody with a corporation, please share this link.
This is the last week, I think, to do it, right? Until
there's good news. There's good news. You're going to love this link because the government just extended it to June 30th.
I figured they would do that, but I was not taking a chance. So guys, if you know anyone that has a company, call Robert or call the other Robert, and I want to maybe buy their company.
Yeah. So what we did, we made an offer, $500. So if you go to that page, there's a $500 deposit for us to start the work. We can help with 3 different loans. You'll see them, 1 loan, 2 different grants. We can help with all the other ones as well. But the 2 main ones in BC and the provinces, other provinces have various grants as well. But in BC, they have the Small Business BC Recovery Grant, which is up to $45,000. That's a grant. They give you money to get your business back up to speed pre-COVID. And the other one is called Launch Online. It's a BC grant for you to get a shopping cart up on your website. And they started out the program. Nobody was applying for it. They said it had to be a products-based business or you had to have products to sell, but they've now opened it up to service-based businesses. So we can help with all 3 of those. We've actually been approved as an advisor for Small Business BC as a facilitator to help give out the loans. We were out on 2 meetings today. I was out with Michelle with 2 meetings today with 2 clients, potential clients, they've actually come on board and engaged us. So the best thing about the Small Business BC Recovery Grant is you can choose us as your representative firm and it costs you nothing to get our services to help. Small Business BC or the provincial government is paying us. So these are a few things that we can do to help the business community out there. But none of you are trading cryptocurrency as a business, right? That's what we thought. Everybody give me a no in the chat area.
Yeah,
Just
right now. So take a screenshot of that.
No, we are not trading cryptocurrency as a business.
No, I am not trading crypto as a business. I didn't know you could do that.
Rinse and repeat. Business? What are you talking about business? I don't know anything about business.
So before we go to the next question, just to clarify Dave's question. So if you are on CERB, you mean cash out, meaning pulling money out of the trading account, not necessarily cashing out of that one trade and buying a different trade.
That's correct. And again, before you file your tax return this year, talk to somebody who's going to look into all this stuff for you. You can go to H&R Block. You know, they have 1,200 offices across Canada, I think 4,000 in the US. Do you think they're trained in any of this stuff? No, they take your slips and put them in the software, hit the button. 4 months later, CRA wants you to repay $14,000 in CERB that you collected. You don't want to have to repay that, do you? No. And Dave asks, you know, how important is it to have your own tax account in your own province? Right now, it's not important at all. You know, today's day and age, I'd say 90% of our 25,000 clients, Dave, are in other provinces besides BC. I've seen maybe 3 or 4 people this year. Unfortunately, Rob and Ed were 2 of those 4. But, you know, most of our clients don't need to see us anymore with technology. We've embraced technology. We're one of the few technologically advanced firms. Our go-to software is Dropbox. Of course, 40 million people use Dropbox for, you know, sharing files with clients. We use DocuSign. CRA has now approved DocuSign and the software we use for taxes has partnered with DocuSign. So we're 100% virtual. You know, we can get on a Skype call, Dave, if you want to chat about some things. Don't talk about anything, of course, on this open chat room, but we can get on a private call. When it's just ourselves and the clients we're talking to, we're protected by client confidentiality and privilege. So we cannot be forced to testify in court against you for anything that you tell us. And I'm sure there's a lot of the people out there that are worried now. You've made some money in cryptocurrency. You're starting to see some success. You know, that's why you're on the call, to learn some more about it. Let's try and structure things so you pay just, you know, your own fair share of tax, but not more than you have to.
That's good to know that they cannot use you in court. But you were very welcoming.
I wouldn't testify anyway.
Right.
I grew up on the east side. You know, it's just something you don't do. You don't throw your friends or your clients under the bus.
So guys, be careful what you say here today on the Zoom. But other than that, they got your picture. Maybe, you never know, someone from CRI could be here. But
smile, Ed. Ed's smiling.
But one-on-one, I know Ed isn't, but I got to mention, Robert was very accommodative, very transparent, very easy to get a hold of, very welcoming at his office location too in Westminster, very close to the SkyTrain station. So, you know, definitely it's not difficult to get in hold of him in person. I had the privilege of doing that. So guys, don't pass up this opportunity.
Some of our team is on the call tonight, right? I see Marion, Brent, Mayumi. I think Joseph's on. So we got a few of our team on here tonight. You know, you can have a conversation with myself, and then we can partner you up with the right person, depending what else is going on with your tax situation. You know, we try and match people up. We have a couple different languages. If somebody's Mandarin or Cantonese, Japanese, what else? What other languages? Filipino, yeah, I forgot. Half the team's Filipino. We're being invaded.
I got a couple questions here. So Daphne's asking for interest, aka like definance. So they're staking their coin to earn 6% interest by letting the exchange borrow their crypto. Will they be taxed during the fiscal year when they made the gains during that year, or is it the year later when they cash out?
So as long as you don't cash out, Canada Revenue says that, you know, you can look at that webpage with CRA, but once you have control of the spending power, right, and you transact that, for example, you go out and buy a Tesla with you made 60,000, and you go out and buy a Tesla. As soon as you buy the Tesla, now you've transacted, and now you're responsible. Let's say you put 30,000 in, you doubled it, you go out and buy a Tesla, you're going to be taxed on the 30,000. And that page on CRA says if you go and buy something with it, it's treated as a capital gain. So they want you to spend the money. That's probably their theory when they got into the war room there at the legislature and then the Senate when they're passing this legislation through. You know, that's their thought process. You know, we want to allow people to make money, but then how do we tax them? How do we tax them efficiently? Allow them a few breaks, allow the rich and wealthy that can afford an accountant to go through it. And Dave asks, he says, you know, how much is it? Your services, do you pay by the hour? If you have to ask Dave, you cannot afford us. That's Dave. Bottom line is about $400 to file a self-employed return. Corporate returns about $1,500. We're on course with most of the national firms. Won't cost you any more. Won't cost you any less.
The feeling I get from H&R Block, it's like the McDonald's of taxes. High volume, quick in and out. Next. And I know Mr. Taxes.ca, he really tries to get into the background story, get to know every angle he can use to your advantage. That's why I appreciate about that extra effort. It goes above and beyond. And before, Ed, you jump into that link, I saw one more question here. Is there any standard percent for expenses to write-offs for income accrued, if any? Because I don't know if there is. It's just
I answered that one. That'll be in that spreadsheet where you can put all your expenses down, but don't go and file a business return until you talk to somebody that knows what they're doing. Otherwise, you're going to be taxed double on any gains you made in crypto.
This has been very informative. Thank you for your time, Robert. And then Ed, how do we